Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, last week was all about the tech wreck as technology stocks slumped as investors sold en masse and bought reflation assets. Now, that means rotating into equity sectors such as financials and energy, which is why the FTSE 100 held up so well by comparison to its US counterparts. Now, by the end of last week, it was the Nasdaq 100's worst weekly performance since February 2021, and somewhat ominously, it was the worst start to the year since the year 2000, when the tech bubble of the 1990s finally popped. Now, growth stocks continue to fall out of favour, with investors flocking to cyclical and value stocks, with the reflation trade in full swing and optimism over the outlook for the pandemic. Even airline stocks surged. Now, the FTSE 100 finished the week down just 0.5%, benefiting from its exposure to energy and financials, while at the same time lacking any notable exposure to the beleaguered technology sector. It's once again a value versus growth story globally, with value outperforming so far in 2022. But despite the minor pullback and the rotation in stock market, it is presumptuous to draw too many conclusions from the first week of trading, especially when markets finish in the red as they did last week. Now, nonetheless, some people still try to draw conclusions. Now, in the US, research claims that when the S&P 500 rises during the first 5 trading days of the year, then the index has finished the year in positive territory 82% of the time. And when the first 5 trading days have resulted in a loss, then the odds of a positive year on the S&P 500 drops to 52%, basically a coin toss. So you can make of that as you will. Now, come Monday, the situation didn't improve for US equities, with bond yields continuing to push higher. The 10-year US Treasury yield briefly climbed above 1.8% to its highest level in 2 years before pulling back. Now, the sell-off in tech stocks accelerated and the Nasdaq composite briefly fell into correction territory. Now, the Nasdaq 100 managed to avoid that dishonor before a powerful midday rebound saw US equity indices finish broadly flat on the day. Now, at one point on Monday, the S&P 500 broke below not only 4,700, but also briefly below the 4,600 level. And it has since recovered to once again be sitting just above 4,700 as I make this show. And it means that the levels I said to watch previously are back in play as levels of support. And if we break below 4,600 again on the S&P 500, then all eyes will be on those December lows of 4,500 to 4,530. But for now, the bull market and the uptrend in US stocks are still very much intact, if a little bloodied. Now, investors still seemingly have faith in central banks globally and the belief that they won't let equity markets collapse, so they continue to buy the dip as they have done this week. Now, interestingly, the equity shakedown continues to be largely US focused, especially in tech stocks. Now, year to date, the Nasdaq 100 is down 2.54%. Compare that with the S&P 500, which is down almost 1%. But meanwhile, European equities are broadly flat, while the FTSE 100 is up 2.26%. So will 2022 finally be the year where UK and European equities outperform US equities? Now, to give that some context, the FTSE 100 has only outperformed the S&P 500 once in the last 10 years, and that was in 2017. Now, on Wednesday, news that US inflation has soared to 7% for the first time since 1982 didn't accelerate the recent reflation trade rotation that we've seen, and that was partly a result of testimony from the US Federal Reserve Chairman Jerome Powell in front of the United States Senate. And so for now, the market has entered a bit of a holding pattern in the last 24 hours. Now, interestingly, some movements in bond and currency markets are starting to suggest that concern is increasing that central banks will raise interest rates too aggressively in 2022, especially in the US. And if this proves to be the case, then that could be what finally kills the bull market. But before I finish, UK investors may have noticed that the pound has strengthened against the US dollar and has now not only recaptured the important $1.36 level, but now sits above $1.37. In fact, it's actually above $1.374 to the pound, meaning that momentum has definitely shifted in favour of further strengthening. Now, this will have implications for overseas holdings in your portfolio, especially in US equities, but it could eventually prove a headwind for the FTSE 100, which has been so resilient year to date. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email. Damien@moneytothemasses.com is the email address. Twitter, money2themasses with the number 2. Subscribe to our YouTube channel. Make sure you hit that button. And also, don't forget to find us on Facebook, Instagram, and TikTok.